Good afternoon, good evening, everybody. This is Dennis Wilborn with the Active Trend Traders, where you're here for the After Market Monday. This is a very quick hitting, like a 15 minutes, 10 to 15 minutes. That's my target for this particular webinar, just to give us an idea of what's going on for the week. So let's get going. All materials presented are for training purposes only. Traders should always paper trade any new method prior to the risk of their own personal capital. My objective for the year is to basically utilize swing trading techniques to push the active trend trading system up to at least 50% for the year. So we got a little ways to go, but we've got 2 weeks to do it. Now we have 8 trading days left in the year of 2017. The objective of today's After Market Monday is timely, actionable intel at the beginning of each week, market review, stocks and ETFs setting up, and then I want to highlight to everybody, we are working on some refinements and actually have already implemented them. 2018 refinements to active trend traders, all membership levels. I'm doing a composite watch list. I capture every stock that is on an IBD premium watch list. I combine them, then I basically do some analysis, and I'm going to see which stocks showed up on the most lists. This last week we had like Facebook showed up on 6 or 7 lists, Grub, YY showing up. And what they say is when a stock shows up on multiple lists, it has the potential to do better going forward because it's being watched by more people, so there's kind of like a self-fulfilling prophecy going on there. Then enhanced portfolio building techniques. Been teamed up with Lee Tanner just to work on the actual portfolio building that will go into effect in January 2018. Then simplified trading opportunities. We're really focused. The reason I'm focusing primarily on swing trades and utilizing intraday entry triggers is to help everybody get ready for 2018. So if you're ever asking yourself the question, what can I do now to prepare for 2018? Well, one, become a premium member and watch what we're doing with the simplified training and trading opportunities. So here we go. Hey, I want to remind everybody, seasonality. We will be reviewing seasonality going into the first part of January. Seasonality typically is the tendency of an entity, be it a index, a commodity, an industry group, to run in cycles or seasonality. There's certain times of the year that is better to buy and to basically not be in, and then other times of the year when it's better not to be in a particular entity. As you can see, S&P, this is 59 years worth of data. And the little pink line up there shows like an average year, what it normally does. The blue line is the post-election year. This is what we anticipated to happen in since this is a post-election year. And the line for the S&P actually looks a lot more like the pink line than the blue line. Now you can speculate on the reasons why that's happening, but the fact of the matter is it is happening. What I like to keep a look, watch on, and we'll be watching this into the new year now, is not, here we are in the part of December, both on the blue and the pink line. S&P tends to get a little bit of a bid or rally into the end of the year, but then at the beginning of the year, it kind of eases off a little bit and then rallies back up into February, and then slants off, drives sideways for a while into mid-April, and then dries up for a nice little gain. What's interesting is I've noticed this same type of pattern, seasonality pattern, on the IBD 50, which I've been following now for, gosh, a long time, but actually doing analysis on it since 2004. And so we've got about 12 years worth of data that show this same kind of pattern. It will push up and typically get a little bit of a bid going into February, drop off, go sideways or even further down, hit a yearly low sometime in the March, April timeframe, then get a nice rally going. And oftentimes, if we can find the stocks that are getting this low here, we can pick up for a really nice move going into the end of the year. But that's not what we came to talk about. I just want to be aware of seasonality. Same thing on seasonality on the NASDAQ. It also, just be aware, end of year rally, but then after January, a little bit of an uptick, maybe about almost 2%, but then kind of drive sideways for a couple of months. So premium members, you've been saying that you really like this concept. This is what we call the no-go table, and it highlights my analysis of 7 excellent ETFs, are basically our magnificent 7 ETFs that we're following. Of course, we trade the leveraged ETFs rather than the leveraged ETFs rather than these basically non-leveraged ETFs, and then our core stock holdings that we're looking at, especially going into the end of the year. I want to be trading Tesla, NVIDIA, Netflix, YY. I threw out Beat. Beat is basically, I want to watch it for a potential trade into going into next year. This may be one of our first portfolio builders along with NVDA. And STMP is my current catfish special. We did get a TSI tick up on the weekly. Not ready to issue a buy order on that yet, or a buy suggestion. But that's what we're looking at. Okay, aftermarket stocks. Here's what I'm looking at going into this week. Basically, institutions are going to be dressing it up prior to the end of the year. They're basically going to get, the institutions that need to be in Tesla are going to be buying a bunch of Tesla. The ones that need to be in NVDA or Netflix or Facebook, they're going to start dressing up their portfolio. So we'll probably see some of the high flying, the big tech stocks and other stocks start getting a bid into the end of the year as the institutions start dressing things up. Seasonal expectations. Santa Rally is underway. I want to focus the last 2 weeks of the year on swing trades that will be closed prior to the end of the year. I want to balance my books out by the end of the year, so we start with a straight $100,000 in trading equity going into the new year. Bonus trades, Nugget. If you were watching on 12/14, we jumped on Nugget at 26.15. We exited 1/2 the position today at 27.54. That's 5.32%, or a gain of about $271 on the shares that we had. I have now set. Now this was a bonus trade. This was for everybody who is an active trend trader, premium or non-premium members. They got an alert to say, hey, we're getting into this trade. And so I would encourage you, if you are not an active trend trading member, to at least register for the regular free newsletter, and you will get triggered in on these alerts. Strategy 1 and 2, I'm looking at Netflix, Tesla, and NVIDIA YY. We had a great trade on YY. Catfish specials, looking at MCHP and AEIS. Potentially, I should have put these in big parentheses as potentially. Refinements for strategy, we covered that. I will be doing a training for the premium members, and then there will be a small tuition fee for folks who want to know how we set up the strategy number 3, which we set that up at the first part of January, and it stretches out to January of the following year. And this is the one where we did a 100% gain on spiders, 100% gain on NVDA for the second trade, did a 50% gain on NVDA for the first trade. And then Tesla, we did earlier in the year, 100% gain, and we actually did a little bit of a loss the last time we traded Tesla going into the end of the year. And Nugget, we started the year with Nugget and fired it because it wasn't working. And when you don't work, you just deserve to get fired. New composite watch list, early warning alert updates on new member strategy 2. I am focusing going into the end of the year so that we can carry this on into next year. I've really had a laid on my heart to formulate and make a way or at least a pathway for folks who are looking to generate some weekly income, somewhere between $500 to $1,000 per week is what we're targeting. I've got $10,000 of our capital allocated to Strategy 2. This week we're up $581. We did both a anyway, we did two trades. We did a trade in YY, and I also had another trade, and I forget what that is right now. Sorry about that. And then Strategy 3. Right now we're closed on Strategy 3 trades. We were up for the position 113% for the year, but this is the one we will be isolated and highlighted on the December 30th. So just remember, there is no holy grail of trading, only tools and rules. Here's our bonus trades that we started for the year. These are intended to be basically just a kind of a thank you from me to you, and triggering in on trades. We did play earlier in the year, and then we closed out half the position on NUGT for a 5.32% gain, and then prior to the close, it had gotten up to about 27.61. I will take out the last half of this position. I mean, if NUGT gets a bid, I will take it out somewhere between the 10 and 15% level. I've got my stop loss right now is a break-even stop loss, so it will, it will close itself at 26.15. So that will be basically, no harm, no foul. Here's the email. Here's the place to sign up if you want to sign up to become an active trend trading members. Get the free newsletter, it's a free news webinar, if you will, called The Art and Science of Active Trend Trading, that provides our access to all of our premium watch lists and also the bonus trades. And so if you are not a premium member, right now we are having a special, $44.99 for a premium membership. Go back. There we go. And also the ETFs, the early warning alerts that Mike Traeger drives for us is sitting at $249, half off of that also. And that's the coastline, just a little bit away from where I live right now. And I think Andrew probably recognizes it's out at Coalina. And so, yeah, we had another guy. We had another, Mark must have dropped off. Another one of our Hawaii guys out here. So let's take a look at a couple of charts. I want to highlight, I'm looking at basically 1, 2, 3, 4, 5, basically just 5 different entities. And I want to show you what we are waiting for. And I'm highlighting this based on the intraday, 1 hour intraday chart on the left, daily, weekly chart. So as you can see with the SPY basically gapped up and went nowhere. However, it did maintain its position up here, but you could see with the long tail on top, that's only a 62-cent tail, or not tail, but range today. So not big, but we did get the real nice gap up, and it's holding. Resistance support will be down there about 267.50-ish. And we'll see if we push higher from here. But what we were trying to highlight, and I will highlight this going forward, is we want to start looking for these intraday places where the TSI gets way oversold. In other words, down to where it usually runs, turns around in the past. And so we can basically click this back, and we'll go, and this is only going back 30 days. But as you can see, what that TSI does for us, folks, is it gives us, when it does get oversold, that gives us a very good area where we can potentially get into a trade, either a quick swing trade for a day and a half, or sometimes a longer trade, as we see right here. We get a tick up, we get a move up this day, gap up, and then basically we could have been in a swing trade from here to here, which is about 3.46% on the SPY, or about 12% on the almost 14% on if you were trading UPRO. So that's what we want to be looking for And what I'm going to, I don't know what to call it. I mean, it's the TSI. We're being patient, waiting on the TSI. Maybe I call it the patience indicator. But if we will be patient, I mean, sometimes you're going to catch the trade, sometimes you're not. Here's what happened in TNA last week, and this just kind of reminded me as we were moving into the swing trading portion of the year, is we had a good signal coming up here. We got into TNA right here about the 60, just a little bit above 69 level, and then dadgummit, Marco Rubio says he's not going to support the tax bill. Boom, dumps that day, takes out our stop loss, but look, gets an immediate reversal, pops up. If patience was saying, wait for the TSI to get down into the oversold condition, okay, wait, and the pattern will show, either a candle pattern or basically breaking through a trend line, and that's where you want to plan your entry. And if we, where's my eraser? There it is. If we would have done that, then we would have been in the trade from 67 up to 70, about today's high or longer. Because especially if we switch over and just use the active trend trading rules, like the close below the 8 period, that would have basically, in reality, we'd still be in that trade, moving up, and TNA may. So that's where we want to focus on. I hope that's clear to everybody. That's what we're looking at. So entities that I'm looking at in Netflix. And again, Netflix is not showing us it's showing us bouncing off of the zero line, which can be a good area of support, but it hasn't really taken off yet. But I want to keep my eye on this. We had a TSI tick up about a week and a half ago on the daily charts, and now we're finally pushing back above the zero line. But we'll see if we get back above this resistance here about the plus 10 level. If not, we get a pullback. But we are pushing up through the 50-day moving average, bouncing off the 8, the 20. And so that was a good move today. But the preferable area is when it's down here around the negative, let's see what. Yeah, down here around the negative 50, somewhere between negative 50 to negative 25 is where Netflix gives us a better bounce, a better bounce for your bucks. Let's see. Awesome, David. I love it when people have success. David just saying that he had a stop loss on TNA at 69.30, and of course it didn't get stopped out. And so he stayed in that TNA trade, and you're still in the TNA trade, right? To let it shoot up. So let's see, NVDA. Again, this is one of those where we get a nice push up on NVDA today. What are we looking at? Well, do we want to take this breakout on NVDA? The answer to the question is no, I'm not going to. Because here's the breakout across that level there, which is up here. Let me draw this a little bit. But what's happening is basically my momentum now is up way above 50 on the intraday basis. I want to wait for a pullback that's going to basically give me back into a support and then a curl up on the TSI. Where are the favorite places to take trades off the TSI? Just FYI. One, the zero line. And the second one is down here in the oversold condition. So what are we looking for? One, we're looking for an entity that shows pattern. Two, remember that this is short-term being oversold. That's what the TSI is showing us over here. We can also get some secondary indications off the market forecast, but I want to focus primarily on TSI. The 50 period, which equates to the 8-day moving average, because you can see here, the 50 period here is 191.92. The 8-day over here on the daily chart is 192.01, so 191.92. So it's within like a dime of each other, and those comes very close to each other. So a lot of times we'll get a pullback into the moving average and then a rebound. That will recycle the TSI, again, either down to the zero line or the 50. But what this is telling you, if we're up here, the TSI is telling us, flashing this big red light saying, wait, wait, wait. So that's the other one I'm looking at. And I'll get one more. YY. YY. What I was going to say about YY, or was that YY? Is with YY, what we want to do is, see how it's nice pulling right back into the 8-day moving average and then rebounding, rebounding, rebounding. Well, we've got a nice little trend line now started that we can just basically trigger up through here. And any pullback into that trend line could provide a potential trigger to move up. As you see, we did not get a great trigger off of the intraday chart today, but we did get a nice trigger last Friday, and that's why we did take that position. We sold the 108, 105 puts that expired this coming Friday, and we got I think $1.30 to $1.25 for those. We bought those back at half price and a little bit lower. We bought them back at 65 cents, and we bought them back at 40 cents. And so that provided us a nice little pickup for the week. So excellent. So YY, what would get me into YY? Well, I'm going to watch. I want that see that pull back into the 50-day or the 8-day moving average. So 50-day here is, or 50 period is 108.76 on an intraday hourly chart. My 8-day is at 108.30. Last one, IWM. Again, I would rather see IWM down here to get triggered back in, but just watch the yellow 50 period moving average and watch it against the 152.05 on the daily, 152.30 on the intraday. And so we do have a breakout. 153 is looking like pretty good support. And that would be just about the top of that candle right to 123.20-ish, or 153.30-ish. So that would be the support there. We're in a congestion area or a resistance zone. But we did just get the TSI tick up as of Friday. Again, the second one, we got a second TSI tick up, and it took off. Nice bounce up today. So again, I'm going to play it against. I'm going to wait for my trigger off the intraday chart, and then be ready to rock and roll off of that. So that's where I'm going to leave you with. Swing trades, intraday triggers. That's what I'm looking at. And just to let you know, those in Hawaii, I will be doing a presentation for, I think it was Doug and Lenny Lee, at the end of December, or correction, end of January. And it's about focusing on what's happening going into the new year. So again, thanks for joining. I hope that gave you some trading ideas. The training on Saturday, December 30th will be 9 a.m. Pacific time. It will last for 3 hours. And so for non-members, it will be the tuition on that will be $199. So, okay, guys, have a great day, have a great week, and again, be patient. Let's wait for those intraday triggers. God bless everybody. Aloha. Good day, traders. This is Dennis. During the month of December, the premium membership for the active trend traders is going to be offered at 40% off its regular monthly membership amount, $44.99, and early warning alerts. You can jump on early warning alerts for $249, which is 50% off the regular yearly membership. So don't miss out on this opportunity. Aloha. God bless everybody.